We're still getting data that occurred before the war with Iran, but this is important to give us an idea of how stable the economy was, what kind of an inflation environment were we in before we entered the war. It's Thursday, April the 9th, and this is Markets with Megan. If you like this podcast, you can subscribe, hit the alarm bell, share with your friends, family, or colleagues. But we're here today to discuss some of the economic data that we received this morning. And while the markets are a little bit weaker today, I'm not so sure that has to do with this data. We are getting, we had that big rally yesterday, and you're seeing some confusion around the ceasefire. You're seeing some violations around the ceasefire, and you're seeing the Strait of Hormuz really not open yet. So investors are taking a breather after that substantial rally that we saw yesterday. But it's very important to look at the data that we got today. So when we got personal spending and income. Over the past 6 months, we've seen real personal spending. So this takes into consideration inflation. It has only grown about 0.2%. It hasn't been able to grow above 0.2%. We've had months at 0.1. We've had months that were flat. But over the past 6 months, it's been very muted. So inflation is taking some of that spending away from consumers. Because we saw in the month of February that incomes declined, but spending was higher, that we saw the personal savings rate drop to 4%. It's well below the past 20-year average of 6%. And remember, this is data for February, and this is before the rise that we've seen in oil. Now, the Fed's preferred inflation indicator that we got also with this report, it's called the core PCE index. That rose 0.4. It came in as expected, but on a year-over-year basis, core inflation is rising 3%, so well above the Fed's 2% target. When we looked at some of the spending numbers, we did see an increase in autos. That's probably going to filter into CPI data that we see tomorrow. We also started to see some of the rise in pricing from oil in transportation services, but within the Fed's preferred inflation indicator, because we don't have the oil in there yet, we did see some of that increase related to tariffs. So now when we start getting March and April's data, this is not only going to include tariff-related inflation, but also the big increase we've seen in commodities. So we do think that there is some concern about inflation in the coming months. And what this data has showed us is that inflation was already brewing before the war, and also that consumers were being squeezed by that inflation before the war. And as we said, we don't even have the data with all of the implications from the war in these data reports that I've been giving you. So it does show that there might be some weakness here in the consumer in the second quarter when we start to get those GDP numbers. Now, we'll be back tomorrow because we're rounding out the week with another inflation report that it tends to be very market moving, and that's the Consumer Price Index. That's all we have for today. If you like this podcast, you go to marketswithmegan.fm. Thank you.